Before we get started with Life in the Tax Lane, a quick message for our fellow tax enthusiasts. Tax Update 2026 is back for its 42nd year with Cait, Joe, Hugh, and Kenneth covering the year's most important tax developments, including dividend refund changes, new bearer trust reporting requirements, increased CRA scrutiny, and much more. Plus, don't miss the new 2-hour Bear Trust T3 reporting webinar that includes a brandable client letter. Stay tuned after today's episode to hear presenters Cait and Kenneth discuss this course. The following presentation has been prepared by the Video Tax News team for Canadian tax and financial professionals. Program recorded June 25th, 2026. Enjoy!
Welcome to the July issue of Life in the Tax Lane. Hugh, sun is shining, summer is on. How are you doing today?
Well, we've got our Canadian anniversary, we've got our U.S. anniversary, and then it's July for the rest of the world. I don't know about you, Cait, but I don't get 3 months vacation. Who do you know that does?
Yeah, no kidding. Ottawa is a bit emptier right now. We have the House that has risen, Senate has risen, and we want to give you a bit of an update on some legislative provisions that have been enacted into law and others that have not. So first off, what has been passed into law? We had our spring economic update bill. Some of you refer to it. It's Bill C-30. That has been enacted. That has a few pieces in there you might be interested in. Dropping down the CPP contribution rate in 2027, immediate expensing for greenhouses being another targeted measure. But so there's a few things in there that have been enacted into law. But I think the bigger story here today is what is still outstanding, what has not been enacted into law. And that is Bill C-31. That is the big, massive second budget bill. Lots of provisions in there. One thing that I know many practitioners are looking out for is the automatic tax filing for certain low-income individuals. That was in C-31. That has still not been enacted into law. And as the House Senate has risen, it's not going to get enacted until at least when they return sometime late September or onwards. So it looks like we're still waiting on that automatic filing. We'll see if and when CRA can start filing those returns for those taxpayers, but still outstanding. Hugh, what do you got?
It definitely makes it harder for CRA to do a project in the fall when they're not legally able to do so. So we'll see how long that gets delayed. Cait, I know one issue that I've heard discussed quite a few times since CRA started moving more business communication online is we have strict deadlines on filing objections. And we already see court cases before everything went online discussing what happens when we miss those deadlines, and the news is never good. But we just saw a court case where the taxpayer's argument was the clock didn't start ticking. CRA didn't send my assessments properly. They didn't notify me. And CRA keeps a lot of data on their electronic records. They were able to come in and say, no. You registered your business for electronic notifications instead of paper mail. You made that choice. And you used your accountant's email address. And we know we sent the electronic notifications. We have record of your accountant accessing the documents. They were properly sent, so you received them. The judge looked at that and said, well, the accountant may have ignored those notifications, but taxpayer, that's between you and your accountant. It does not reopen your reassessment period. What I found a little chilling on this was the court went on to note that since those case facts, we got the massive broadening that CRA can use electronic communication for businesses by default. And the court said, I'm concerned that this really increases the risk of people missing these important notifications. The deadlines haven't been extended, but I can be concerned. I can't do anything about it. Only Parliament can change the rules. Only Parliament can extend the deadline. So don't miss those 90 days to object, and especially don't miss the 1 year after that date deadline to even ask for an extended period to object.
And as accounting firms, what are we doing to communicate this risk to our clients? How are we setting up the systems to protect our clients? Because keeping that dispute rights options open is just massive. Another issue we had this month, CRA, they have been expanding their education, their communications related to the new Voluntary Disclosures Program. We've talked about it on this program. The VDP program has been significantly revamped. That occurred last October. And what I like about this month is CRA has a tax tip. They go through some of the more basic issues about voluntary disclosures. They try and provide a bit more clarity as to penalty relief, interest relief. But they also really hit the nail on the head on concerns that I have heard both from taxpayers and professionals about the new voluntary disclosure program. So Hugh, what are some of those concerns?
One that I hear from not only taxpayers, but tax practitioners. How complicated is this? Do I need to go out there and hire a high-end tax specialist to help me to help my client?
Mm-hmm. And you know, when I hear that, it goes back to the answer to many, many tax questions. It depends. Some issues are simpler. Some issues are much more complex. You got to ask, you know, how much is at stake? How much penalties? How much interest? What is your risk tolerance? So it really depends. But I know CRA have been coming out and saying one of the points of this revamped system was to provide a bit more clarity, certainty as to what to expect through the system. So whether you are a taxpayer, you do it yourself, whether you're an accountant that isn't a tax specialist, take a look at the program, get familiar with it, then you can make the call. Do I hire a consultant to help with the application, to do the application, or am I comfortable with following CRA's guidance? So it's a depends. Hey, Hugh?
Yeah, I would say, Cait, you hit the nail on the head. How complicated is the underlying issue?
Yeah.
That's probably a bigger determinant than voluntary disclosure, but we'll provide links to CRA's guidance, and that'll give you a pretty good idea what they're looking for. I always follow along with that when I'm doing VDP. Cait, one question that may not be a happy answer, but it's an answer that I think we and a lot of our clients have been waiting for. We had a taxpayer go to court recently because when she filed her 21 tax return, she missed some T5 slips. Apparently, she hadn't received them by the time she filed her return because she was getting it done early. CRA, much later, reassessed her. No problem. We found it. We added it back. Well, the next year, 2022, she missed slips again. This time, CRA is not so friendly. You missed income this year and you missed income in the preceding 3 years. That's an automatic penalty. So she's now appearing in court saying CRA is being mean. They're refusing to waive this penalty. It's not my fault. The slips weren't on their autofill service when I filed my return. Well, both CRA and the court were pretty unsympathetic. CRA said, we had the slips by the end of February. Where were your copies? You couldn't get them from the financial institution, even if they weren't uploaded? And our records show they were uploaded before the end of April. Plus, you amended your tax return for multiple issues before we picked up on this. How come you didn't add the slips back in? So not a lot of sympathy from CRA or the courts if we've missed T-slips. Now, that may not be late enough to get us into voluntary disclosure, but cleaning it up yourself minimizes the risk of a penalty.
Another item we wanted to talk about this month, pretty interesting court case coming out. We had a taxpayer who had been deducting over $100,000 annually for several years in respect of fees that they paid to a corporation that provide specialized flow-through share tax planning services. So we're looking at the deduction of that $100K. We're not looking at whether the benefit we got was legitimate or not. But what I found really interesting is the court, in looking at this case, really looked at, okay, what was the payment for? What were the services that this corporation provided? And it wasn't limited to simply advising as to whether you want to buy or sell shares. They were providing wholesale tax planning techniques. They were implementing these tax planning programs. And that goes beyond what advice and what work we can be doing in order to claim that immediate deduction for these investment counseling fees. And as I'm thinking about that, I'm thinking more broadly as we have some of these bigger tax planning costs, whether we can be getting a deduction for those costs or not. Now, the other thing I wanted to mention that came out of this court case was the other issue about, okay, so you're deducting these fees to get a tax benefit, but where was that deduction in respect of costs incurred to earn income? If you're not incurring these costs to earn income just to get a benefit, you may lose that ability to deduct regardless. Now, the court did not opine on that issue, but it does bring up another issue that we need to be considering as we have some of these bigger fees for various types of planning services.
Okay, that's all the issues we have time for, but I know for those who are concerned about the impending Bear Trust rules, you might want to stick around and watch our information on our new course on that topic.
Hey, Ken, it's back.
What's back, Caitlin?
Bear Trust reporting.
And with it come new exclusion, new exceptions, and new traps for the unwary.
I have to say, as I'm thinking about these new legislated rules that are going to capture many of our Bear Trust arrangements, I think the common theme, the default rule, needs to be recognized. If you have a Bear Trust arrangement, you are into the rules. You have to file either a T3 or a Schedule 15 unless you meet an escape hatch, legislated carve-outs from the rules.
These escape hatches can be tricky though. Lots of nuances to watch out for. So during this 2-hour webinar, we'll use a lot of real-world client example to illustrate these escape hatches. We'll talk about joint accounts, interest for accounts, real estate arrangement where parent adds children, vice versa, nominee companies, partnership property, estate planning structures, and lawyer trust accounts. Lots of things to think about, Caitlin.
There are additional added benefits about thinking about these Bear Trust reporting rules in advance. Potentially, can we help our clients meet certain carve-outs, meet conditions to be a listed trust now while we still have time in calendar 2026? Potentially, can we look at these Bear Trust arrangements that our clients may have and consider whether we should be winding them up in 2026. Yes, we still need to file Bear or consider filing for Bear Trust arrangements in the spring of 2027, but at least that could potentially help us in the spring of 2028.
And we'll talk about the importance of ascertaining your client's intention. Did they actually intend to set up a trust? And why it is important to start documenting that intention. And that can happen now instead of last minute.
One of the tools we are going to be including in this 2-hour webinar is a brandable client letter that you can use to communicate with your clients to help identify whether we have a Bear Trust arrangement or not. So getting the conversation going, the earlier we can start the questions, the earlier as a firm, we can figure out these rules and plan for the additional workflow in the spring of 2027.
The Video Tax News team has been providing Canadian accounting professionals with practical tax information for over 40 years. Subscribe to one of our tax newsletters or join us as we present live and pre-recorded seminars relating to both personal and corporate tax. For more information, go to videotax.com. The preceding information is for general informational purposes only and deals with dynamic, time-sensitive, and complex matters that may not apply to particular facts and circumstances. The information provided should not be relied upon as a substitute for specialized professional advice in connection with any particular matter. For more information, go to videotax.com/disclaimer. Copyright Video Tax News, Inc. 2026. All rights reserved.